Good afternoon, welcome to GrainTV. My name is Cody Bills, this is Logan Burgess. Today is the 30th and we had the market moving lower here. We also had quarterly grain stocks. We'll talk about that in a moment. But before we get there, let's turn over to the iPad and see where we closed off the day. Corn trading down 5 3/4, soybeans down 10 1/4. We had Chicago wheat down 2 3/4 cents here. Logan, we had the quarterly grain stocks. How'd that impact the market?
Yeah, absolutely, Cody. Well, that was the big story here of the day. And if you take a look at this table, the middle column shows what the trade was expecting in a poll out from Reuters. The right column here shows what we actually got from the USDA this morning in terms of those September 1st grain stocks. You can see that for corn and wheat, they both came out above trade expectations. Those were both negative factors today on the market, but the soybean number was really the one that caught a lot of attention. There was a lot of hype built up into this number. As we know, the exceptionally tight ending stocks projected for 2013-14, but as you can see today, the actual September 1st number came in well below trade expectations, and that was in spite of a crop revision of 69 million bushels from the USDA. So the big takeaway is that the USDA did underestimate demand for the old crop marketing year. That's something a lot of analysts have complained about and have mentioned throughout that marketing year. So I guess that may be one reason why we didn't see an exceptionally strong move higher after the number. We did see an initial move, but really not a lot of follow through.
Absolutely. When you look at the initial move, you notice we started moving higher here. Of course, 2 days ago, we put in a little bit of a bottom down around 908. Today, we went down. We tested 910 in the earlier part of the trade session. Then this report came out. It allowed us to spike up here. We were up to as high as 930 at one point. Yep. But then we saw all those gains erased. And really what I think the reasoning behind that, we're talking old crop. This stocks report is really about old crop grain here. And what we do know is that we've seen a lot of the old crop demand for the soybeans reflected in basis. Yep. That demand and the premium in old crop basis, we've seen that just sucked out of the market here in the last couple weeks. Yep. And I really think what we're seeing here is the market just kind of discounting this old crop information. This is kind of almost, it seems like a lagging indicator, right, as basis was really reflecting how short of a crop, right, we really were when it came to soybean supplies in the pipeline.
Yeah, absolutely. You know, today's reaction basically closing where we were before the report came out. Really short flash in the pan in terms of what this report was able to do for the market. In my opinion, it's going to continue to grind lower. We do have the next big grain report coming out on October 10th. And obviously, we're going to see some of the numbers today reflected in those September 1st grain stocks in that report. I think, though, it's going to continue to be that yield is going to be the story for corn and soybeans. I don't know how much of a factor or how much importance is going to be put on the old crop carryout. As I said, in my opinion, we're going to see this market continue to be pressured here as we move forward. Tomorrow, we will get ethanol numbers out, as we always do on Wednesday. Take a look here at this chart. This details the ethanol crush margin in eastern Iowa. You can see that it's slipped quite a bit here. Really over the last couple weeks, we've seen the price of ethanol come down a bit, a little bit offsetting a very cheap cash corn price that we're seeing in Iowa right now. We did see a sizable revision lower last week in terms of week-over-week ethanol production, but seasonally we tend to see that. And if you compare this marketing year, even though in its infancy, to past marketing years over the last 4 or 5 years, the weekly production totals still remain very strong. Now, this may not be the kind of thing that's going to give corn a good bounce here in terms of futures price, but we're absolutely seeing it in terms of basis. So right now, if you're looking at making cash sales on this new crop, it's very important to take a look at ethanol facilities, maybe ethanol facilities that you don't typically sell to. We're seeing cash corn premiums there, and if you need help finding those, we have a great tool here at Grain Hedge. So give our office a call if you have any questions about that.
That sounds fair enough, guys. Thanks a lot for tuning in. If you have any questions about anything we talked about today, or if you want to take a demo of even the mobile trading platform, yep, or the desktop trading platform, we can set you up there. Of course, you can also go to the 14-day free trial at grainhedge.com. Put your name and number in there. We'll reach out to you. We'll give you some one-on-one training. Make sure that you feel comfortable not only downloading the platform, but also customizing it to your own trading style. So thanks a lot for tuning in. We'll see you here tomorrow for the Ethanol Sales Report.